Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Certainly global equity markets, again, very nervous out there. You've got the added complications now from this sell-off on the Volkswagen scandal with the emissions, but also obviously as well after the Fed left rates unchanged last week. There's now quite a bit of debate about really when the US Fed will look to pull the trigger and increase US interest rates. Quite interesting, several Fed officials over the weekend were still indicating that 2015 was still a time when interest rates would increase in the US. But I say with this increased nervousness now in global financial markets, it'll just be interesting to see if they do pull the trigger or not. Next meeting in October, and we should maybe get a little bit of a clearer picture because we'll have the unemployment data from early October, but also as well as we enter earnings season as well. It'll be interesting to see the US companies on their guidance going forward, obviously with the situation in China and depending on how much the companies sort of feel that that's slowed down really and will impact on future earnings. And if that wasn't all enough, we enter October, which historically has been a very nervous time for equities. So it'll just be very interesting to see how it all sort of pans out. Obviously, consumer confidence is pretty important as we sort of head into the sort of latter months of the year, and especially sort of into that sort of Christmas spending period, when certainly retailers and producers will be expecting to see some pretty upbeat numbers coming through as consumers look to spend. Oil still seems to be holding around that sort of mid 40s level, around the sort of $45. Just be interesting to see how that sort of pans out. Certainly a lot of storage out there about a lot of stockpiling of oil, looking for prices to increase. Here in New Zealand now, we've seen some increase in the dairy auctions for the last sort of three auctions there, and that's probably enough just to pose a little bit of a pause now on the Reserve Bank in terms of rate cutting. We think the next Reserve Bank meeting will leave rates unchanged, and really just that gives the opportunity for the latest rate cuts to sort of see how that sort of impacts on the economy, say with a little bit of increase as well coming through on the dairy auctions, but also as well obviously you've still got a pretty robust housing market, especially in Auckland, and it's just waiting to see how that sort of all filters through into the economy. Certainly, I think of the next Reserve Bank meeting, rates were left unchanged as they just wait to see the impact of the recent two cuts. I say, but also as well, if you do continue to see upward movement there on the dairy auctions, that'll just be interesting to see how that all sort of comes into the mix. Also as a note as well, obviously the New Zealand dollar has fallen quite dramatically, and it's just going to be interesting to see the impact on sort of imports and the potentially the inflationary risks coming through from that. But obviously here in New Zealand, with the increasingly low rates and term deposits rolling over at much lower rates now, sort of 1 year is now below 4%. There are other options out there with sort of dividend shares, property trusts, etc. Some of these are even structured, in the sort of pie format as well, which can be tax efficient. So if you're interested in looking at those, say call us on 0800 867 323, or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.